China strikes back. I'm your host, Steve Van Metre, and thanks for joining me today. And our lead story today, China is accusing the U.S. of economic sabotage. But if you think we're going to take this laying down, well, we're not. We're fighting back. Let's go to Bloomberg, where we picked today's story up with a headline: China slams the U.S. on debt limit and accuses Washington of sabotage. The U.S. needs to cope with its own debt problem, according to the Chinese embassy. The criticism came from the Chinese embassy on Monday, which blasted the U.S. over its catastrophic debt problem and accused it of sabotaging other nations' efforts to resolve debt problems. Now, you would think this is a pretty interesting statement because you look at the debt ceiling, it seems to be a U.S.-focused issue with our government. Why would China suddenly say, hey, wait a minute, you're committing economic sabotage? What is their real reason here? Is it simple because they hold U.S. debt? Is it because there's a dollar shortage? What is their motivation here? And we'll then look at how we're responding. Noting that the Treasury has begun taking extraordinary measures to meet its obligations after the U.S. government reached its borrowing limit, the biggest contribution that the U.S. can make to the debt issues outside the country is to act on responsible monetary policies, check that out, cope with its own debt problem, and stop sabotaging other sovereign countries' active efforts to solve their debt issues. So what they're suggesting here is the Fed is making bad decisions by continuing to raise interest rates. We've talked about in the past how this tends to lead to a stronger dollar. Now, of course, we know the dollar's come down in value, and that's perhaps what China needs more of. We talk about this global dollar shortage, and when the dollar goes up in value, it creates a problem for other countries, particularly if they have borrowed in dollar-denominated debt. So I want you to see what China's doing here and saying, hey, look, you're tightening monetary policy, there's a global dollar shortage, there's this massive amount of debt, and you're making it worse. Now, notably, what I don't seem to understand is the fact that they think we're sabotaging other countries. We didn't ask them to borrow in dollars. We didn't force people to do it. They chose to do it. And as far as being responsible for their own debt problems, well, I think we can all agree we could do a lot better with that. The Treasury's measures give it space for some months before it runs out of cash. Economists and bond market analysts anticipate the ceiling will have to be raised sometime in the third quarter to avert a U.S. payment default, which would be economically damaging for the world's biggest economy and the global financial system. So the third quarter is quite a ways away. We've got many months to go through before we have to worry about it. But let me say one thing here very clearly. We have never defaulted on our debt. So China knows this. Everybody knows this. What is going on here is a whole heck of a lot of political posturing. Republicans who control the House intend to use the debt ceiling deadline to extract deep spending cuts from White House and congressional Democrats. President Joe Biden's position is that U.S. credit is too important to haggle over. And this is, again, is a story that gets rehashed over and over and over again with the debt ceiling. One party says, look, we need to cut. The other party says, look, we can't default. And they're going to continue to do this until the last possible minute, like they normally do. And then both sides are going to agree. Somebody is going to cave. But again, it's a lot of political posturing here. You think about from the Republican standpoint, if they can win and get concessions through the Democrats, they establish themselves as a party in power now. Doesn't matter what the numbers are. When they talk, the Democrats will listen. The Democrats on the other side of the fence say the same thing. If they can beat the Republicans, they're going to establish themselves as a dominant party going forward, and knowing that if they want something, they can pressure the Republicans to cave. So this is going to go on for a while, so hang tight on that. But let's dig a little deeper and see what China's real issue here, because I don't think we've hit it yet. China holds about $870 billion in U.S. debt, notably the second largest holder of U.S. debt, according to the latest data from November, and they've been selling off their treasuries. Now, this is important that we've talked about this in the global monetary system with the dollar as the reserve currency. China wants, and not just China, all their countries want to accumulate treasury securities. That is like gold in a dollar standard. They want to accumulate them. So the fact that China's having to sell them isn't something they want to do, but it's indicating a global dollar shortage. And so I think what we're starting to see China say, hey, is if you could get this problem of yours settled with your debt, maybe we wouldn't have to sell more of our treasury securities, of our reserves, and perhaps things around the world economically maybe can get back to normal. China has become the world's biggest creditor to developing countries, some of which are facing a mounting debt crisis. Now, perhaps the issue here, the group of 20 nations has set up so-called common framework that brings Paris Club of traditional rich debtor countries together with China to restructure the debt of low-income countries on a case-by-case basis. And now we're starting to get to the real story of what China's up to. They go into developing countries and say, hey, look, would you like a bunch of infrastructure and cool stuff? And those countries say, yes, of course we would. And China says, here's the deal, we'll loan you the money to do it. And they get really excited. And we're going to bring all of this product in so that you can have it. And they're really excited until they find out it also involves Chinese labor. And so what China is doing is putting a lot of small countries into massive piles of debt. Of course, the game is simple. Can't make loan payments? Well, we'll just repossess all of this infrastructure and we're going to own your country. So that's what China is really up to here. Assuming Secretary Yellen's statements about the debt were correct, the best prospect of the debt issues outside the U.S. would be the U.S. Treasury Department solving the U.S.'s own domestic problem, given how well she knows about the facts, according to the Chinese embassy and her professional capacities and her team's implementation ability. So again, all you're seeing here is China is trying to deflect from the fact that they have a debt issue. And we talked about it on the show with their real estate crisis. They have debt issues. And how did they solve it? Lowering interest rates, more easing. What are they trying to tell the U.S.? Do the same. We're tired of selling these treasury securities, but they're guilty of the same thing that they're accusing us of. For the U.S., its trickiest debt ceiling showdown came in 2011 when S&P Global Ratings alarmed enough to cut the sovereign U.S. debt rating from AAA. The move roiled markets and ended up damaging consumer confidence, hurting the economic recovery from the credit crisis. And that is something nobody wants right now. Let me show you what happened in 2011. The stock market came crumbling down. Now, it eventually did recover, but right now, nobody wants to see the markets come down because they know it's part of the wealth effect. They need American consumers, and when I say they, I mean China needs American consumers to go out, borrow money, spend it, and that money will flow back to China, who is trying to reopen their economy from their COVID-0 lockdown. They need to put people back to work. And so you start to get to the story here is that China saying, look, you're sabotaging the world by not dealing with your debt issues. We don't care about how much debt you have. What we want you to do is get the government spending again, because if the government stops spending, then people might stop spending because they get a fear that they're not going to get their checks that they're counting on. And if they stop spending, well, then money stops flowing over us. We have to sell more of our treasury securities, and the situation can possibly get worse, particularly if the market comes down. If you're wondering why the market hasn't been coming down despite efforts between sellers, well, that's because our CTA-Timer report is showing that the machines aren't selling. They're holding these long positions against $20 a month. I'm probably going to go to 30 this weekend, but I want to point out on the Sunday show, we talked about how money was going to flow into Japanese markets, and here you can see in the machine reporting here, if you're wondering how to use it, it gives you a good idea of what the machines are headed and how you can get in front of them. Now, let's continue on because we've talked about what China's up to with their threats here, but guess what? We're striking back too. We're not taking this laying down at all. The U.S. confronts China over a company's ties to Russian war effort as the Biden team sees evidence of non-lethal aid going to Russia. The people who asked not to be identified discussing private deliberations declined to detail the support except to say that it consists of non-lethal military and economic assistance that stops short of wholesale evasion of the sanctions regime the U.S. and its allies imposed after the Russian forces invaded Ukraine. So here you can see kind of tit for tat. Oh, you've got a problem with our debt ceiling? Well, we have a problem with you supplying our enemy. And boy, all of a sudden now you can see this is shaping up because who has a heavier hand here? China or the U.S.? Well, you know which one. The administration is reviewing the evidence it's accumulated to determine its significance. A finding that Chinese companies were supporting the invasion would have troubling implications on the U.S. policy toward both Russia and China, which is already strained. And if Biden and his advisors determined China's government was involved in or tactically accepted the actions of those state-owned enterprises, they would be forced to decide how much to push back. That could risk opening a whole new era of dispute at a time when the U.S. has sought to balance its desire for stabilized ties with Beijing. So you can almost guess now what that means. More sanctions, more tariffs, more ways to hurt China's economy. So you start to think about the big picture here. They're over here blaming us for our debt ceiling issue, which in the months to come will get resolved, and we are not going to default on our debt. Meanwhile, China's economy is starting to recover here, and what do they not want? Well, you got it. More sanctions, more tariffs. China on principle rejects any sanctions, so you go, apart from those agreed at the United Nations and the views Americans call on other countries to restrict trade as a violation of sovereignty. There are thousands of state-owned enterprises in China, some directly controlled by the central government with chief executives who rank equal to ministers and others who are subject to less direct supervision. All of them are subject to Communist Party influence, even if the details of their operations are not always monitored in detail. And I can guarantee you not one of them wants to see more sanctions and tariffs out of the U.S., not at this time. So if you thought we were going to lay down on this one, not a chance, but don't worry. China can bark all they want, but we've got the bite. And with that, I'm Steve Van Metre. Thanks for watching. Thanks for being fans. Bye now.